Kalshi's back up. Woo! Do you know how that helps me so much?
You can pay rent now? You're good for this month?
Yep. All right. Pump it up.
Good news and bad news. Bad news is only people showing up as well, so we have to stay with. But the nice thing is we don't have to move too much here. We just have to stay there, stay
Do we still use the
Sir, ladder down here first before we go up, so we'll probably bring it down. here. Goes up front. Camera upstairs should be ready to go. Just have to turn on the video.
Oh! I'm sure you saw this one. I'm going to bring this up because I feel like it's our dispersion conversation for equity people. All right, 1 week with no nicotine.
Everything's going your way.
Yep.
I've seen charts very similar. Yeah.
Oh, you know what? I got to fix my...
All right, your audio's switched on, correct?
1 minute out and 5, 4, and 1 out.
1 minute count. Yeah, my audio's off right now. All right, well, there, everybody knows 1 week without nicotine. That means we're jacked. All right, fixed now. See, the problem is yesterday we didn't have audio. Today we're definitely going to have audio because we've got audio and the show hasn't even started yet.
You want me to cut the video?
Good afternoon. Welcome to Chicago Future of Finance. I'm Oliver Renick. Thanks for tuning in to a very special Friday edition of the show. Markets are hanging in right now. Equity is a little change to the upside by about 0.5%. S&P 500, 50 bips. The good thing about the chart for stocks is that, all it's going to take is maybe one good day for us to get back to all-time highs. Obviously, there's been some jitters in the market. I booked today's show kind of thinking that maybe we would get some bigger action today, but we do have a few things happening that are worth some attention. Number one is that crypto is firming up. You got some jawboning from Treasury Secretary Bessent, who says that legislation, once it passes, should help clear some of the crypto volatility out of the way, but isn't that kind of the whole name of the game? Isn't volatility the feature, not the bug for crypto? Certainly interesting to hear the Treasury Secretary trying to pump crypto. Don't turn me into a Democrat. Come on. All right, yellow across the board. That's generally been the risk radar because there's a lot of things that are hanging in the balance right now. Namely, we saw that the metals peeled off a good bit, but gold is hanging in there again today. But we've got the bonds also a little changed, the dollar a little changed. I don't see a lot of answers in the chart. I think we might just be putting off some of the volatility until next week, perhaps. Now, if Bitcoin does make a bigger move, then the red will come off. But first, let's start with the S&P 500. Here's what I'm looking at. Range bound now between the 7,000 at the highs and basically 6,800 at the lows, which you can see we've pretty clearly set up now consistently as support. There's the line between 68 and call it 69.75 that's held pretty well. Yesterday I pointed out what I'm concerned about in the market, which is the bearish divergence in the S&P 500, which means lower highs on the RSI. As you can see, we've been getting the drop off in momentum even though we are trying to push and make records for the S&P. Hasn't quite happened. That being said, though, what's good about this chart is that we're still so very close to the records here. All it really takes is a good session. The problem that I see is that we can't really have a big, powerful section if we don't have the mags working for us. And right now, they are hurting. The MAGS ETF trading below 62 bucks. There's a line of support there that it's trying desperately to hold, but it hasn't been able to do it. So that is still concerning to me. That's one of the reasons why I've got the yellow light on stocks. Volatility, by the way, also has been quite a fascinating chart. My simple up and to the right diagonal line that I've gotten a lot of hate for from the volatility experts has worked pretty darn well. And you've also seen that momentum in VIX has been picking up. So it doesn't look like we're ready to completely exhaust ourselves of volatility with VIX sitting at 20 right now. But the big move is in BTC. Nice little session in terms of percent, 5.5%, but you still have a little bit of a flag pattern down here. Something that looks generally, I still argue, bearish, but holding the key 60,000. You can see this dash line here that we touched, we kissed, we held. But if you take just generally the last couple of weeks, you still have a downtrend. But at least you've now got some horizontal support showing up at 65,000. I think a lot of what we're seeing today is much needed lines in the sand holding. Coinbase being another one, holding at 150 bucks after earnings. We've got Dan Dolev joining the show from Mizuho, one of my favorite equity analysts who will be with us. We've also got Brent Kochuba to talk volatility and set up into next week. A few things expiring today, but not a huge expiry for markets. And then we've got Dillian joining us to talk some macros. Always a fun hot take from him at the Daily Dirtnap. And Mr. Scott Bauer joins on the line as well for Prosper Trading as we head into the closing bell. I got Brent with me right now from SpotGamma. You know, Brent, one of the things that's been making its round on X is this chart showing the number of stocks that has dropped off hard. And I feel like that has been very consistent with what we've talked about, which has been dispersion within the options market and volatilities from a single stock perspective. But now we see that the equity market on the index level is holding on some volatility as well. I mean, we got VIX at 20, so still some tension here.
Yeah, I think tension is the name of the game, Oliver, and we're starting to see kind of record levels of dispersion. Correlation and dispersion obviously are pretty.
Yeah, basically
well-linked.
flip one on the head, right?
Yeah, and so when you see this record level of dispersion, the correlation indexes we look at are warming up, right? But the dispersion is really quite crazy. So like how much are individual stocks moving? That's very wide. Nomura had a chart. We were talking about that for a second yesterday. And there's that chart that you mentioned that's making its round on Twitter. And what that's basically telling us is that things are whipping all over the place, but they're doing so in ways that is rather unprecedented. The chart from Nomura shows that there's as much dispersion now. Single stock moves on average are 10% in the S&P versus the index unchanged is pretty wild. You got to go back to the COVID period, when COVID hit, then the great financial crisis, then you have to go to the internet bubble. So that's the kind of level of sort of dislocation that we're talking about. And the problem with that is that the forward returns from basically any of these metrics that look at how much dispersion we're having, the forward returns are just ugly, right? They're nasty. So when you think about the instability of the market, right, how much underlying stocks are moving, the fact that the index isn't moving, you got to feel very uncomfortable about the position that we're in. I think the fact that we have a 3-day weekend here, there's not that much options flow buying this dip. There's a mild flow related to expiration today in the single stock space. Nobody's out there buying like 1 month, 2 month calls right now in any of this stuff. So you got the 3-day weekend, and then we're going to go into OPEX. And I think OPEX really could be this sort of pin that is pulled that suddenly everything starts to sync back up, right? That dispersion and correlation spikes and dispersion sort of normalizes or mean reverts. And generally this stuff cleans up to the downside, right? Equities sort of start to drop. The other thing that I'll note here, Oliver, is that you really have a hard time finding anything that's getting bid. The memory stocks, we talked ad nauseum about them. The only thing, honestly, that looks like generating a call bid at the moment is energy and TLT. Long bonds are bid at the moment.
Yeah, boy, I got smoked on that, by the way, just because I'll be honest, if I get it right, I'd like to pat myself on the back if I get it wrong. I got bonds wrong. You know, I thought that we were going to see yields break out, but instead we saw price break out. At least I got the chart. I knew a big move was coming, I guess, but I just got the wrong direction here.
Yeah. And the data that's come out has confirmed that. So if you're sitting here looking at equities, you're going, well, what space do I want to go into? Maybe I want to buy the dip in software, arguably because some names have gotten too crushed. That's a small sector. The mags are rolling over, as you just mentioned. Energy, do you want to get into energy at these highs? Who knows, right? But there's nothing gold and silver beta. Where do you go, right? And the only thing that seems to be catching a bid is bonds, on the idea that we're not getting a rate cut anytime soon. And is this a safe haven now? People see it as safe haven if equities start to roll over. So this is a very tough spot. I was describing this before as like you don't crash going from 0 to 100. Like you stage at 50, then you crash, right? And so we're staged at 50. That doesn't mean we have to crash. It just means the conditions are in place for us to crash. And so, that to me is what's worrying. And as long as we're under 6,900, I really worry about that. I think if we break 6,800, then that's the signal that we're going to go test that 6,600 level. I don't know what makes you mark that on our screen, but that's where we see negative gamma really trough, right? So that's showing for us as a level that, if the downside break happens, that's a nice 3 to 5% downside move there. And I think that would really start to sort of normalize these various dispersion measures and vol measures that are so dislocated right now.
Just pulled up your SpotGamma. You're the most kind of simple version of your short-term chart here, intraday. It does seem like we are kind of maybe panned in between a few areas here, but to your point, if we are on the kind of lower half of that 50-50, then we need to be on alert.
Yeah, and we've not had that trigger, right? We're 1% from all-time high.
Yeah.
But why are we unable to sort of push above that level, and why are these single stocks breaking so violently lower from there? Google was at 350, it's at 300. Microsoft, moving way down. Nvidia is kind of trending a little bit sideways here, but Amazon way down. So we're not getting this response of leadership at all out of any sort of major sector. In the equity market, the SPX has not responded to the downside, right? That's the head scratcher at the moment as to why the S&P, quite frankly, hasn't had that 2, 3, 4%, downside move. The fact that map right there is all red tells us that we're in a negative gamma environment here, and that is true while we're under 6,900, and that's the condition for volatility, right? Dealers hedge by selling as the stock market goes down. What adds to that is if vol starts to spike. So when VIX starts getting over 20, that's a signal that Vega as a downside driver, right, as convexity kicks in, right, that happens to the downside. So those flow conditions are starting to materialize, and historically, OPEX is this moment for regime transitions to take place, right? And so we have VIX expiration on Wednesday, and that, again, is this moment where you go, like, okay, like we're starting to sort of like line the ducks up in a row in terms of where you want that risk radar to be red, right? You got to worry about that downside. I don't know what the inspiring upside is, again, other than maybe you look at software where the vol premium is certainly very rich and there's some interesting trades there, but buying the dip in CRM is not going to lead the S&P to new all-time highs, I don't think.
That is a very good point. And to that statement, Brent, the range, the yellow's there because of the range. If you're trying to kind of get ahead of the move, then maybe you think about positioning to the downside, because to your point, I'm very concerned about the MAGS chart. To me, it's just, I love the rotation concept. I'm happy. I could be a small cap guy. I'm an underdog type of dude. I don't mind if there's rotation. I love a little spin, a little tango in the market, but the math is much easier for the market when big tech is either stable or trending higher. But now we have broken lower in the MAGS cohort, especially, I think, when you combine the technicals on MAGS with your options analysis, which says the flows are applying a good bit of pressure right now. That means you need a big force to get out of those flows. Same thing if you look at the chart with the bearish divergence, at 7,000 essentially. We need the big boys to get us over that hurdle, or we got to get everything else. If you don't have those 7, you basically need the other 493.
That's totally true, and I don't know that we ever really dealt with the extreme concentration that we had. That was such a topic of conversation for a long time, where the top 8 stocks were, the entirety of the S&P and the entirety of the NASDAQ, right? And so, to your point there, to lift this out, then you kind of need that MAG bid. Now, wouldn't you say with Claude Code and all this other stuff that the AI models, the leading AI models, that should just be more business for them, and the capex is fine and all that. So, it's not ultimately clear.
And
why
that is
there's
kind of
so
my
many
view.
out there. Yeah. It's not
Somebody in
clear
the
why there's not a
chat.
bid there.
Somebody in the chat said that there's this contradiction of hyperscalers, the narrative that hyperscalers are wasting their cash flow, but that also AI is disrupting all these industries. So I actually sympathize with that. I think that generally selling off on CapEx when you're spending on a good business model is like the best type of sell-off you can have. So I do think if we get this shakeout that you're describing and we make a drop, I'd be pretty ready to buy at support at 6,600, and I'd probably go for the mags.
I would totally agree with you, and we would clean up some of this, again, this dispersion, right? The fact that everything is so uncorrelated as it's been, and so we've had these spasms since Jan OPEX. The spasms have been very consistent. You can see them there on the chart, and so, again, how do you sort of like clean all this up? Well, if you drop 3 or 5%, all equities go. Correlation spikes, all equities move down kind of in conjunction with each other. That maybe opens some quote unquote value or some dip to buy, that is interesting material, right? It's a reason to be in the equity market. And I'll also just say this, I was making a joke about this with somebody before. Pam Bondi in the congressional meetings yesterday, her pushback on some kind of illicit topics was, the Dow is over 50,000. Why should you care about this thing that we're talking about? And it was just this hilarious thing, and it seems offsetting, but that's what the government is focused on. So the idea that
that in crypto, apparently, according to Besson,
everything. The idea that Trump doesn't throw ultimately everything. This feels like a Jared Dillon comment, maybe. Would just throw everything to make sure the stock market goes up over time. Can be true, but in the short term, right now things are quite dislocated and pretty nasty.
Yeah, well said. Okay, let's talk about this chart from Michael Batnick here of Ritholtz that put together a great visual on showing the single stock blow-ups versus the index calm. I mean, I love that everybody caught on to this. I also love that, frankly, we were so ahead on this. The options have made this very clear. If you know how to read the options language, then it has been screaming this. It's all we've been talking about for what? The whole year? Basically, because the dispersion, when dispersion is an input variable that you look at every day when you are an options professional like you, like the guys here, like what I'm doing, frankly, Noel Smith, our whole team here has been talking about dispersion nonstop, the difference between single stock vol and index vol. And now the equity people and the stock people are seeing it in this form. So I love it. But I think this is also testament to why if you learn how to read options, you are ahead of the curve. I mean, this is the stock version of what we've been discussing all year.
Yeah, I think that's right, Oliver. And what catches my eye about this chart, obviously, is the fact that the S&P has not broken lower. And that doesn't make a ton of sense. But correlation in the indexes we were talking about, we're flagging a lot of these other big drawdowns, right? To the point. I was sick of talking about correlation and the fact that it was so low because of these, the spasm situation. And it's like, look, I'm boy who cried wolf sitting over saying like, this is a problem. Now,
that's what this has been. Our Core 1M conversation was that chart for the last 3 weeks. Go ahead.
Yeah, and so you can make this argument. You say, look, despite us waving our hand about correlation, oftentimes when that signal of risk, right, has flagged, the S&P drops 3, 4, 5%, right? It's happened many, many times over the last year or 2 years, probably 5 or 6 times at least, right? So this is an enigma that we've seen this risk, but to the point of the chart you're just looking at, we haven't paid the piper in terms of the equity drawdown. Now, this is forecasting a pretty unbelievable drawdown, right? You're talking 10, 20%.
Yeah, that's the implication.
So much attention
is that usually when you have these many single stock blowups, it's because there's a high correlation sell-off happening.
Yeah, and so okay, I can't speak to the magnitude that's being projected on this chart, but the 6,600 thing totally makes sense to me. And I think again, while we're under 6,900, you just got to maintain that put protection. I'd be looking at put spreads now to try to play this because the vol's starting to lift and put skew starting to lift. But this has all the makings of a market that can have a really nasty move lower. Doesn't guarantee you that it happens, but again, you have to be kind of in position to crash before you crash, right? And that seems like a crazy statement, but we generally don't go from VIX 12 to VIX 30, right? You have this first spasm, things get shaky, and then we kind of puke. And I think, excuse the French there, but that feels like it's imminent as we move into OPEX and start to lose some of the stuff that may be supporting the S&P.
And you're looking at end of month for the big OPEX?
So VIX expiration is on Wednesday, so that's the 18th, and then 220.
All right, next week.
Yeah, next week. So
right.
Wednesday is when stuff starts to get weird. Now, if you want to play the options market supporting stuff today, we have a 3-day weekend. Do you really want to carry protection over that weekend? The single stock, anyone that was, I think, long vol in the single stock space yesterday, a lot of them were tied to today's expiration, so there's a kind of a 0DT single stock component, I think, helping the market today. We can see that. So this is a light bounce for sure. But I think I feel better about shorting this bounce right today than if the market broke 1% lower and being short into the weekend. So if anything, if you're a bear, you like this bounce, I think, because it gives you an opportunity to sort of, think about positioning into the weekend, buying 2 or 3 month to expiration, put spread, something like that, and then waiting to see how this thing plays out next week.
Okay, great stuff. So still looking generally for a bigger puke to get index vol in line with the single stock vol that has been showing up in a big way. Great stuff, Brent Kochuba. Thanks for joining on a Friday. I'm looking, by the way, right now at your tape, and we see a bunch of Coinbase trades in there, which sets us up for our next conversation with Dan Dolev. For those who aren't already following Brent, make sure you scan QR code on top right to get the free daily flow patrol report. And a great look also next week for the expiry coming around the bend. Thanks, Brent Kochuba.
Thanks,
Appreciate
Oliver.
you, man. Yeah, great stuff. You got it. All right. Speaking of the Coinbase trades, I'm in an overdue catch-up with one of my favorite Wall Street analysts. Mr. Dan Dolev is joining us from New York, the Coinbase expert and one of the biggest trades of the day after earnings, finding some key support. Dan, how are you?
Hey, Oliver, it's great to be on your show.
Thank you. Likewise.
You're the greatest of it.
Well, my job is easy. I just get to show up and get a haircut every now and then, try and make it entertaining. You got to try and figure out. Well, yeah, maybe that. Dan, the Coinbase move after earnings. Tell me about that. Firstly, technical support. We see a lot of big options trades today. What did you make of the number?
Yeah, I'm actually pretty surprised. I'm surprised and I'm not, right? Like, I think there's something going on right now. And Bitcoin, I saw last time I saw Bitcoin was 69,000. It's the correlation between the Coinbase stock and Bitcoin, right? It's basically just Bitcoin. And so Bitcoin trading up, Coinbase going up. CPI is a low CPI is good for Coinbase.
Okay, you break up a little bit there, Dan, but and by the way, I'm happy to just take your audio if you need, but you're telling me that the light inflation print, did I hear you right there, that light inflation's good for Coinbase, good for trading?
Give me 1 second, let me just...
Hey, there you go. That sounds better already, I think.
It's going to be better now. 1 second.
Yeah, beautiful. There you go. I'm going to bring up the chart here while you get that set up. Give some perspective. Because I had a yeah, there you go. That's great. Yeah, I hear you good. 18% today. I've had this line on Coinbase for 3 years, by the way, on my chart. It found support at $150 April earlier this year, and then the summer and fall last year. So with that perspective, go ahead, Dan. Keep going.
I love that you show this long-term chart because, I mean, yeah, it's up 18% today, but look at just how disastrous it's been since the peak, right? So it's like this could be, I mean, again, it's very hard to call these rallies, but this could be sort of, like a little bit of a fool's rally on the way up. So I wouldn't be, we're neutral on Coinbase. As you know, we've always favored Robinhood over Coinbase. And I really don't think there's anything that's changing here. There were some good things like, as you know me, I look at the fundamentals more than I look at the price. And the fundamentals were fine. But, what caught my eye, and this is something that I think investors need to pay close attention to, is the retail kind of like casual traders stepped away and that caused basically a massive decline in the take rate. I think from 154 basis points to 142, and management said that they expect this trend to continue. So I think we might see a few more quarters of like take rate bleed, which is not good for the stock.
Okay, what does that last phrase mean, Dan? Takeaway bleed? Did I hear that right?
Take rate bleed. So like
Okay.
take rate, remember like Coinbase's take is about 150 basis points on the retail side. And that's already, I would say, 2x what Robinhood is charging on crypto. So the fear on Coinbase has always been that that take rate is going to get worse. Like the yield that they're generating on a dollar of crypto that's traded, basically, what they
Okay.
take home on a net basis. And that's been our more cautious thesis on Coinbase has always been that it's not going to go higher. If anything, it's going to actually come down. And what you've seen in Q4 is you've seen a quarter-over-quarter deterioration in that take rate because of mix shift to the pro trader away from the casual retail trader.
Okay. Now, the price, is there a certain convexity to crypto traders like there is? Like, for example, I think there's a lot of convexity in MicroStrategy, where if, it stays below a certain point, then the profile becomes very concerning given how much leverage is in there. Should we think about crypto traders as an extension of that, or are they generally a little bit more balanced than, say, strategy?
No, I think crypto traders are the most risk-loving risk takers in the world. In fact, we've actually done survey work around it, and what we found out is that prediction markets are basically when people are, I think 50% of the people that said that they're going to start doing prediction markets are actually selling their crypto.
To
So
do
I
that?
think they're financing
Wow.
it. That's another reason to sort of stay on the sidelines on Coinbase, because it's 100% crypto right now. I mean, they're getting into equities, they're getting into prediction markets, but right now it's pretty much still 100% crypto. If crypto is a substitution for prediction markets or vice versa, that's not great for crypto.
Okay, now that stat was what per, and where did you get that stat from, Dan? That's fascinating.
That was proprietary research that we've done that basically people are I would say at least 50% of survey respondents basically said that they might consider selling their crypto in order to finance prediction markets. I thought there was some very, very strong answers. You got to take any consumer survey with a grain of salt, but it tells you directionally what people are saying or thinking.
And what percent of the sample size said that?
The sample size was somewhere between 200 and 300 people. Retail traders that trade both equities and crypto on both Robinhood and Coinbase platforms.
Okay, and which percent say they'd be interested in selling their crypto to trade event contracts?
I think the number was in around 50%.
Wow.
Or basically 50% of actually, let me put it that way. 50% of the funding is going to come from selling crypto and 50 from like fresh money. Or something in that. I have to go back. This was a few months ago, but it was a big number in terms of where does the money come from to buy prediction market bets.
Okay, got it. That's fun. That's fascinating. That's a great stat. I love that you guys. I love your own kind of homegrown research there. It's what I always like about it. So, all right. Do we know where, for like Saylor, we know exactly where his threshold is for his break even. Do we know where the pain point is, like where the point of entry is for these crypto people on Coinbase?
This is a great question, Oliver. I go back. I mean, back in the day, it was 20,000. That was the cost basis. This was the last cycle. So we actually we surveyed that as well. And back in the day, 20,000 was. I mean, I'm talking like in the last crypto winter, 22. 20,000 was sort of the cost basis. That was the inflection point at which most people are actually in the red. So I don't know where it's right now. It's got to be, it's got to be higher than that, right? Because crypto's gone up a lot. But it's there is a certain point. I mean, it really depends on 20,000 Bitcoin, right? It's all driven by Bitcoin at the end of the day.
Yeah, true. Okay. Now, in terms of the company, just back to some of the numbers again. Obviously a loss, big decline in revenue. Do they have other levers they can pull? what kind of creativity, does Brian Armstrong have at this point? Because it feels like spending money on the Super Bowl ads and trying to rev people up is sort of, I don't know, it seems like kind of pounding a little bit of the same, beating the dead horse a little bit. Like, can they do their own kind of crypto style event contract or something? I mean, like, what kind of ace up the sleeve might they have?
Yeah. So he's been very creative in adopting my haircut. That's for sure. Now, but I have to be so.
You're a trendsetter, Dan.
I'm an influencer.
Hey, give me about 5-6 years running my own business. I might be in the same camp.
I'm an influencer for 50.
My hair cutter is getting more. My barber's getting more and more creative by the month.
Yeah, I'm an influencer for 50-year-old couch potatoes. But so look, I mean, they're doing the right things right now. They're actually getting into prediction markets. They just announced it in December. They're getting into tokenized equities. But Oliver, I think, and again, I'm neutral on Coinbase. I don't love it. I don't hate it. I think, I love Robinhood, as you know, but I've always been, since we've met each other, I've always had sort of, kind of like a little bit of worries about Coinbase, and they've materialized now, right? Because such crypto exposure. I think I wouldn't say it's too little, too late, but when you have such a visionary like Brian, and he pivots away from this kind of massive crypto economy and into kind of following a little bit like Vlad's footsteps in terms of prediction and tokenized equities, it tells you a little bit maybe that he's no longer as big of a priest as you thought that he was, and I think it sort of shows up in the multiple. That's maybe not really the numbers, but it's something to keep in mind when you think about Coinbase.
Well said, Dan. I want to make sure I at least get 90 seconds from you on Hood. Last year it was my stock of the year. I kind of generally feel that the numbers are very different from Coinbase because even though they are selling off, I think because of the crypto-related stuff, which did decline, they still beat most estimates on their other metrics, did they not?
Yeah, and it's like crypto is only 18% of their mix, and if you think about 2026, we surely hope this will be the stock of the year, and it is our top pick. And so, what to expect this year? They're getting super aggressively into Europe. They just got that ISA account, which is kind of the 401k. You can't really be in the UK without the ISA account. They're the fastest to get into tokenized equities, and prediction markets are flowing off the charts. So all you need is kind of Bitcoin not to continue to derail, and this stock is going to work. But remember, at the end of the day, it's less exposed to crypto, but it's still largely crypto could be a big disappointment if it doesn't work.
Yeah, no, that's very true. 18%, obviously a big chunk compared to a brokerage say a decade ago, but this is the future of finance, and to not, obviously it's been part of their success. So I think they right now kind of have a manageable balance, a manageable exposure. What do you think the stock might be worth next year, Dan?
Which one, Robinhood?
Robinhood.
I mean, I think our price target is in the 170 right now.
Okay, so you think you get back to new all-time highs?
I hope so.
All right, nice. Great stuff.
Definitely higher than where we are today. That's the hope.
Well, it's been getting taken to the woodshed, no question about it. Glad we got you, Mr. Dolev. Great to see you again. I think last I saw you was at the Robinhood conference in Vegas.
September. What a great conference. Loved it.
Yeah, that was a lot of fun. Other than me crashing my bike with Noel Smith in the mountains of Vegas.
Well, I didn't get that pleasure.
Thank you, Dan.
All right. Thanks.
Great to have you on the show.
Long weekend.
Yes, sir.
Weekend.
Absolutely.
Thank you.
And we will be in touch with Mr. Dan Dolev again for sure. Love the take on Robinhood. Love the take also on Coinbase too. Likes Robinhood more than he does Coinbase. Little action behind me as I get ready to bring in Jared Dillon. Let's check in on the market here for a moment. Blowing the brakes today as we're in a bonus show. That's the fun of the bonus show. There's the chart of Hood, but the S&P 500 intraday has slipped a bit. We are declining over the last half hour, 68.60 on the intraday, and off by 30, 25, 26 points from the high of the session. But the stuff that was up the most is still holding on pretty well. Bitcoin cooled off after an early bounce, but did hit upwards of 70,000 after Treasury Secretary Besant came out and basically jawboned it, I think, is the way I would describe it. Mr. Jared Dillian is on the line with the Daily Dirtnap. Jared, what's going on, man?
Yo, how you doing?
Doing pretty good. Speaking of Vegas, you had a little show that you did. Looked like it was popping.
Yeah, I played at Omnia at Caesar's Palace. It was a
that's
gig of my life. It was awesome.
That's a big club.
Yeah.
That's a big club. I'm all too familiar. What's your style? What are you playing when you're DJing?
For a big venue like that, I'm playing uplifting progressive house, kind of old. When you're opening for somebody, the cardinal rule is you don't want to play any of their tracks. So I was opening for Zed, so I had to be very careful not to play anything that Zed was playing. So I was playing older stuff from like 2010 to 2014, just to make sure that I wasn't going to play anything he was playing. So.
Okay, nice. I like uplifting house. That sounds pretty good, man. That sounds like good Vegas vibes.
Yeah, I'll send you. I actually recorded the show, so I'll send you a link and you can listen to it.
Nice. Where can folks find your music? I'm giving you a plug here.
Yeah, go to SoundCloud, search for DJ Stochastic on SoundCloud.
I knew there had to be something finance in there somewhere.
Yes. Yeah.
That's great. Okay, nice. All right, so today, Treasury Secretary comes out on I believe it was CNBC interview, says, don't worry, crypto folks, volatility is going to clear when we get legislation passed. I joke this guy's going to turn me into a Democrat if he's trying to pump crypto prices. Jared, tell me what you think.
It's funny. I've kind of been busy writing today, so I haven't been super plugged into the news. The Treasury Secretary trying to pump crypto. I don't think that's a very good sign for crypto, honestly. This kind of like, gosh.
I thought it was supposed to be sticking it to the man.
This is very unusual. We've talked about this before. Just to disclose the position, I'm still short MicroStrategy. I've been short from about 260, 270, still short. Still think it's got some downside. I think Bitcoin is going to ultimately land at about 55,000 before all said and done. So I'm not looking to cover my short anytime soon.
Over what time period, Jared?
Over the last 3 or 4 months.
Well, in terms of that target, you said mid-50s. When do you think that is?
Pretty soon, actually. I would say in the next month or two.
Do you think that this should be categorized as general crypto volatility, or is there something unique about this particular selling at this juncture? I would prime that pump by saying I certainly think there are some things that are different about it. What do you think?
Well, I heard your last guest talk about the fact that people are selling crypto to finance prediction markets. I was always kind of wondering about that. I think that's super interesting. I think that crypto getting institutional adoption in the form of ETFs and Bitcoin treasuries, that all happened with Bitcoin above 100,000. Not all of it, but a lot of it. Looking back with the benefit of hindsight, that was kind of like a sentiment top, when it got this institutional adoption. I don't know if the Bitcoin ETFs are getting outflows here. I think they are. I think they are getting some outflows. They got, just relentless inflows after they launched. But I wouldn't be surprised if getting some outflows here.
They also were, all credit to it. The ETF is a very successful product from that perspective. In terms of, what's driving it. A couple days ago, CoinDesk put out an article saying U.S. Bitcoin ETFs register back-to-back inflows, citing Bloomberg data. I don't know about the last couple days, but that's what they put out there. Which is kind of something that happens in risk assets when they come off, right? People buy the dip, kind of the idea. But to your point, in terms of kind of like what trick is next, they launched the ETFs. They kind of had this sort of this Wall Street push. I feel that there's a catch to that. One is that, okay, you get the Wall Street flows, you get the ETF flows, but the catch to it that I see from this point is that when you are taking an asset and injecting it into kind of traditional portfolios, which most advisors didn't really. There's some advisors who have picked up on crypto. Most advisors still generally don't really mess with the stuff. But for anyone that's looking at it from a kind of Wall Street driven portfolio construction standpoint, I think this sell-off is particularly bad for it because stocks have been so strong. You got a really bad beta for Bitcoin. It used to be beta to the upside and also beta to the downside, but in the last year and a half, it's just been beta to the downside. So to me, that is a fairly unique regime that we've been in. And then you pile on the strategy part to it, where now you have this massive levered instrument right in the middle, which Bitcoin didn't have before, and I feel there are unique risks in the space.
Yeah, I mean, I'm not necessarily anti-Bitcoin. I'm not anti-crypto. Some people are,
Yeah.
I've owned Bitcoin at
I'm a little bit more anti than you are. Yeah.
Yep. So look, like if Bitcoin gets down to 50, below 50, honestly, I'll probably buy some of the ETFs. I'll probably stick a toe in the water and yeah.
The potential for buying the lines, I'm going to look at a few lines on my chart. 60 was the big one, which we did touch, we did hold. The other thing, too, that obviously I've been harping on nonstop is the bearish divergence in Bitcoin, which actually puts the breakdown target for me at like 25 to 30,000. That obviously would be fairly catastrophic. If you're thinking about buying at 50 or mid 50s, Jared, why not stab at 60 when it hits? Where do you get the kind of mid 50s target? You think there's something technically that points to that?
Yeah, I don't think 60 is going to hold. I mean, we're going to retest it, and I think we're going to bust through. I don't know if you saw the Saylor interview on CNBC.
Yeah, I did. Yeah.
It was not confidence inspiring.
Right.
Saylor doesn't really have a plan. I'm trying to think of the liquidity impact of him being a forced seller of Bitcoin and what that's going to do to the price. So I do think we have more downside than 60. So
yeah. Jared, the other thing too is that from a trader standpoint, you've got street smarts, and one rule of trading that I feel is kind of like day one, week one, is never announce your stops. And every time he keeps saying that they can go down to 8,000, I feel like he's telling us all where his stop is. Doesn't the market sniff that stuff out? Like if you're the second biggest holder of something, and you come out and say, I'm going to buy it all the way down to 8,000, but then when I get there, I'm going to sell it. I'm going to have to sell it all to you. Why wouldn't I sell them now and pick it back up at 8?
That is absolutely true. But just from a trading standpoint, I never use stops. Stops have a tendency to get elected at the worst possible times, overnight when liquidity is low. I have mental stops, I have psychological stops, but I will not put a stop order in the market. I never do.
Okay. Exactly, because the suspicion, right?
Yep.
Market maker will sniff your ass out, baby. Hey, Jared, last point here real quick. Is we got a light inflation print today. Dollar has stabilized over the last couple months. I kind of thought bonds were going to sell off and yields were going to rise, but instead we got good economic data for employment, for ISMs, and a light inflation print. Should we be turning a bit more optimistic on the economy? Give me your 60-second take.
No, look, the internals of the stock market are really, really bad. A lot of these growthy names, a lot of these meme names they've been rolling over for the last couple of months, like DoorDash and Carvana and stuff like that. The internals are bad. I don't necessarily think a lighter inflation print is good for stocks. It was a little bit today, but we got a pretty anemic bounce on the CPI numbers today. I wouldn't call that a strong bounce. So look, I think Pam Bondi put in the top 2 days ago
by talking about the Dow.
talking about the 50. I thought, dude, that's a bell ringer if I've ever seen one. We just, if we get about 0.5% lower, we're pushing through support, and it's going to be ugly.
Okay. Always fun and a unique take. Jared Dillian, DJ, trader, author of the Daily Dirtnap, SoundCloud, Stochastic, right?
DJ Stochastic.
DJ Stochastic. I'm gonna start. I'm gonna start using that for your lower third. DJ Stochastic. Great stuff, Jared. Thank you very much for jumping on.
All right, thanks.
You got it. Appreciate it. Jared Dillian, author of the Daily Dirtnap. All right, the show has roughly 12 minutes left here. Not quite taking it all the way into the bell. Let's close it out with a bang. Mr. Scott Bauer joining me on the line from Prosper Trading Academy. Got a 1 minute break, and I think we're going to come right back here. Market, by the way, heard a little bit of noise behind me. Just check on that real quick here, as we do see the S&P 500 holding in for the ride, but boy, barely. Really at the low end of that range there for sure. But overall, I think that's basically what we could ask for today, is the stock market holding in and just not breaking down further despite the bounce in crypto. No real bounce in stocks. Scotty Bauer is with us. Scott, what's going on, sir? Good Friday to you.
Happy Friday the 13th. I think a lot of people...
Oh, yeah, I forgot about that.
I think a lot of people are happy the week is over, given the extreme volatility we saw this week. Jobs number, CPI today. If you kind of look back at the week and say, yeah, we're right here, we're just slightly lower for the week here, I think a lot of people would actually breathe a big sigh of relief. Now, you guys were just talking about internals, and I don't think the internals are really good. And what I look to, Oliver, is something we talk about all the time, is the bond market. And with what happened to the 10-year, okay, I mean, we were just literally, last week, we were talking about 430 on the 10-year.
Yeah, I got smoked on that.
Right, and things going the other way, which if we had broken much higher, that could have been really, really bad for the market. Here we are down at what, 405, 406, whatever it is. And yet the market doesn't really seem to care about that to the downside with rates coming down. So
you're right.
I don't know if that's more of a concern that, this data that's coming out that is soft and, better inflation print and blah, blah, blah. I don't know if that's just adding to the narrative that maybe there's some things underneath that we're not really paying attention to, like you guys were just talking about, the internals not looking good.
Yeah. To your point, the bid into bonds, the push down for the 10-year, I generally... I don't love that as a sign of risk appetite. To your point,
I don't either.
I would prefer, I would prefer us having to deal with higher yields. To be honest,
I think the big concern is why are yields going down? Are they going down because things are getting worse? Right? Everybody wants to see them go down because they want to see the Fed cut rates, right? But along with that comes a reason why they are going down. And I don't like the reason they are going down. Yeah, we're sitting at 405 right now on the 10-year. Look at this move here. I'm pulling it up here. Look at this 1 week move.
Yeah,
Look,
I mean, it's a doozy.
There is nobody I know of. I'm saying nobody that I know of that last week when we saw 428 here, okay, and it was on the 20th of January when we were up near 430, and then literally on February 3rd and 4th, right approaching 430.
Yep.
There is not a single person that I have talked with that would have said 1 week, 10 days later, you're going to be touching or on the precipice of 4%. If you had put something out there, Kalshi, Poly Market, wherever, and you said, are we going to hit 450 or 4% first? I guarantee you 90+% would have been on the 450 part.
Yeah. Sorry if I led our viewers astray on that one, because I definitely missed
we can
it.
forgive you after MicroStrategies.
Yeah, I had a few other solid ones. But I think that the data here's why markets are so tough, why trading is so tough. It's because I based that view off my expectation that the economy was going to print good numbers, which it did.
Yep.
It hit ISM above 50 manufacturing. It hit the employment above expectations. And inflation is good when it's lower than expected, but maybe that kind of accelerated some of this. I don't know. I don't think this was so much economic related. I think this was asset price related because we had stocks drop off. We had a couple big single individual name blowups. We had the crypto pressure. That's what I think put the bid into bonds.
It is definitely possible. It's been not the risk off arena that we have seen recently, right? When the market's been troubled and people typically bid up bonds, we haven't seen that recently. Now, this week that can change next week. The flavor of the week was all right. We're going to see that, and we've also talked about how over the last several weeks, months, whatever it might be, that we're seeing rates around the world going up, especially with in Japan, and so. We've seen our rates ticking higher to there also, and now all of a sudden, this is a major. It's not a collapse. This is a major to go down 24 basis points in a week. That's massive.
Yeah, Scott. You know what else I think too is I pulled up the yields here in the purple line next to the gold in candles. And I think also the fact that gold stalled out yesterday got hit. Silver has been unwinding. Those were these kind of extra diversifier trades that I think were part of the risk-on appetite. And when they failed, silver in particular, you can see where there's a strong candle in the 10-year downward telling me that I think that the sell-off in metals finally pushed people into bonds.
You bet. And when you talk about the dollar and look at a strong candle, we saw that earlier in the week when the jobs number came out.
Yeah,
and that
dollar finally caught a bid.
Very short-lived. Very short-lived. I think we talked about that, and that is the climate that we are in right now. And I don't know where people are looking for protection or safety right now. I really don't, because it's still I'm old school, so I still go to the usuals when I want to have that protection. But some of the themes, some of the thesis of those old tried and true risk haven types of trades maybe aren't necessarily playing out like we thought they would.
Yeah. Well, I do think that's where the silver and the gold trade apply, because they kind of threw this kind of curveball a little bit to the market, where you had gold as something that worked in so many different environments. It was that kind of risk-off safety diversifier, but then when you've got massive red candles, because it becomes this speculative tool, and silver being a much more intense example that I got up here now, I think those complicated the picture. If gold and silver lose their mojo, then maybe bonds will get some of theirs back.
I mean, when gold and silver become a FOMO trade and become a meme trade, which we've talked about, and they absolutely did, that the market is people are kind of grasping at straws in that particular time.
Yeah.
And you guys were just talking in your last interview here, those kind of psychological things, and you mentioned Pam Bondi saying 50,000.
Yeah, jinxed.
You may look at that. And say, that's funny. That's a joke. There is something to that. Because we know human nature. We know psychology. We know that in the past, when the cashier at the supermarket, your Uber driver, whatever it starts talking about something that is so popular, and that FOMO starts hitting, that can be a sign of a top here. So we can kind of laugh at what she said. I do think there's some relevance to it.
That's to Jared's point too. I mean, I think that when stock market and investing commentary starts showing up in weird places,
No
like
good.
getting shout outs
No
at
good.
testimonies over. I don't even want to talk about what the testimony's over. It's so awful. But when like we start referencing 50K among like Epstein stuff, then like,
It's no good, man. It's no good.
that might be the time where it's become a little bit too much in the cultural dialogue to be sustainable.
Totally. That's typically, as a trader instinct, right? I don't know the empirical data behind it. I really don't. Trader instinct, when something like that happens, you typically want to fade that.
Yeah.
that is what you want to do. So, be interesting. Next week's a bit lighter week just with earnings and with some of the eco data, but now the announcement that came out today that we may see something out of the Supreme Court next Friday, maybe, that should probably keep vol elevated a bit.
Okay. Yeah.
But I don't see a lot of optimism underneath the market right now. They don't.
Yeah.
That doesn't mean I'm saying, oh man, we're set up for 2, 3, 5% to the downside at all. That's not what I'm saying. I don't see a lot of optimism out there.
I will say, though, to your point, it's so tempting. It seems like it's a place to fade vol based on the simple chart that I've got, which has been this very reliable uptrend in VIX. We're at the high end of that range. So, it's tempting to want to try and fade vol to some extent.
I mean, the last couple times we saw the VIX really pop, it took a nanosecond, to come back down. Now, is that trying to hold? At some point that'll break, right? But I think you got to respect that for right now.
Yeah, okay, fair enough. Scotty, great stuff. Appreciate you as always. Have a great weekend, Mr. Bauer.
You too, sir. Bye-bye.
You got it. Scott Bauer, Prosper Trading Academy. All right, VIX uptrending. And into the weekend, not much of a bid for stocks. Looks like we might be going red here, unfortunately. One last look at the chart. You can see intraday, we're just toying with that 6,800, like a back and forth, like a yo-yo, a cat batting at a string. Doesn't look like it's going to break, though. Hopefully we can at least hold that line in the sand into the weekend, into next week. I will see you on Tuesday. Thank you for tuning in to Chicago Future of Finance, a special Friday show. Have a great weekend. Good luck. I'll see you next week.